Welcome back, Charlie Gasparino.
I'm just trying to figure out. I have to do this every time I
Yeah, the video, start video.
start video.
And I'm going to share my screen and bring
All
up
right, I'm
some.
in. I'm
okay,
in.
you're there, and I'm going to be showing some charts while we're talking, Charlie.
Okay.
Thank you for coming back. I read all the stuff that you sent to me, and so we have some nice topics to discuss. Why don't we start with spending money and the infrastructure bill? First of all, what 1.9 trillion? Are the Democrats going to be able to pass this without any Republican support, like they did on the rescue bill through reconciliation, or do they need some support to do this?
Now, I think the Senate parliamentarian. I mean, it's all about timing, right? So
yeah,
you could do reconciliation like twice a year, or yes, there's a number of times you can do it. They haven't hit that limit yet, so they can pass this through reconciliation. And my guess is they will. The question is, what does Joe Manchin do? Does he? He usually caves at the end for these Democratic proposals, but he does it with a wink, with a twist to it. So he may say, "Oh, I only want, instead of 2.3 trillion, I only want 2 trillion, and don't raise the corporate rate beyond 24% instead of 28%." So he'll get something to protect his because he's a Democrat in a red state. He'll get West Virginia. He'll get something to show his quote unquote moderate bona fides. But this thing will go through.
Who would have thought he'd be wielding this type of power coming into this?
The minute the Republicans did not win those 2 Georgia Senate seats, and that's on Donald Trump. I mean, he just distracted the voters there so much, saying that the election was rigged. His base stayed home. It's mathematically proven pollsters have done this, shown where he was strongest during the election, where people just did not vote in the runoffs. And Stacey Abrams did an amazing job getting out the other side of the vote. He cost them. He's the reason why we're having all this spending blow up, because he didn't do the right thing for his party at the time. So.
Okay, what do you think of the composition? I mean, it's not all infrastructure. I know there's 400 billion for guys like me, the old geriatric population. That's not infrastructure. Those are, people just, on their in the 7th inning stretch for another couple innings.
I'm right behind you. I'm in the 6th inning, but here's what I would say. This is where you're getting a lot of sort of static among the hedge fund traders I talk to about deficits and worried about, listen, who knows what's going to happen. I mean, the U.S. is the tallest midget in the room at this point right now. There's not a lot of places to park your money, but, if they could, there is a theory out there that when this thing starts, when the markets start to digest this thing, rates will gap out like dramatically, and that could have a huge impact on the budget deficit, meaning that we are paying just that much more of the deficit is now going to service debt. And if you get into that sort of spiral, that's when you can have rates spike dramatically, and it could be a real problem for the economy. And then the question is, does the Fed at that point come in and start suppressing rates? And a lot of the hedge fund guys I talk to think that's a real possibility if you get a 10-year that starts spiking above 2%. Right?
Okay. All right. So you know what? Bringing that up, kind of is a great segue to talk about Bill Huang, right? And you wrote about it. In 2 days, his fortune melted away. Charlie, what I find interesting about this is, and it really happened because I forgot the shares that got him in trouble, but it was really just a secondary offering that made the, I learned that from reading. It was a secondary offering.
Mainly, remember that secondary offering?
High leverage, ultra high leverage, but secondary.
This is what happened. My producer Lydia Moynihan did great work on this, because Bill Wang was a Christian, was a devout Christian fundamentalist, apparently.
Okay.
He gave a lot of money to King's College, which is a newish Christian school in Manhattan, which my producer went to. So
Okay.
we had an interesting insight into what he was doing, how he was marrying his philanthropic efforts for Christian charities with his with his family office hedge fund. Um, some of the reporting she did showed that about in 2014, the college she went to did a review, a report on him and other potential donors. They found out that in 2014, his net worth was less, and maybe significantly less, than $1 billion. It had grown since 2014 to before it blew up, and it depends on whose numbers you look at, anywhere between 10 and 15 billion. So
Yeah.
that's how much money and how fast he made. If you calculate that out, because this was his money, he was not accepting outside money. He had a net worth that was at least equal to Steve Cohen,
Yeah.
to Dan Loeb, uh, surpassing Bill Ackman. I mean, he was literally one of the richest men in America before that thing blew up, because that was his money. And then what was the fatal mistake here? Well, obviously, I mean, he was, engaged in leverage, and he was doing, listen, you guys
Yeah, he
understand
didn't
this.
read my 10 commandments, and number
Yeah.
one is use less leverage. I even have a little tune I wrote about that because it's a double-edged sword. So
Well, it wasn't
when the
just
market give
leverage,
it, and the market giveth away, taketh
but it
away,
wasn't
right?
just it wasn't just leverage. It was like leverage on steroids.
Right.
He did, and by the way, lack of diversification I mean, simple shit, right? So think
Yeah.
about it. He did one trade with leverage trade with 5 different banks. Okay,
Yeah.
the biggest one was Credit Suisse. He was engaged in a swap where Credit Suisse would somehow wouldn't hold. Credit Suisse held the stock. I mean, it was this basket of stocks, including Viacom, right, and Baidu and Discovery. And those were in there. Those were the baskets of stocks and more. And he was doing that with 5 different banks. No diversification. So if a bunch of those stocks imploded, they imploded 5 ways. And
Okay.
that's what happened beginning when Viacom did a secondary. And
With Viacom. Yeah.
so Viacom does a secondary. Obviously, it saw its stock, thanks to Mr. Wang, go up from like $50 a share, because I covered a lot of Viacom's, all the whole thing with CBS and what they were trying
Right.
to do with to merge the two together. Um, it was like a $40 stock, $30 stock. Then it started to explode on all this like irrational exuberance about streaming and
Everything.
everything. And when it's high as 100, Bob
Yeah.
Bakish, the CEO, is a smart guy. He says, "All right, I got 100. I gotta raise some capital." He does that.
Right.
The market freaks. It goes back down to 40, and that was the cascading event with that. And I think Discovery fell with it because they're both in that sort of same space, and they were both pumped up for the same reasons, and that set off the chain reaction where he couldn't meet margin calls at any of the banks, and they had to sell those. Then they start selling the stocks, and it's sort of the stocks
It
go down even
snowballs.
further. It's
Yeah.
like
Yeah.
it was really amazing. It was amazing in the sense that everybody says it's complicated because it's swaps, and I'm not like an expert at the swap market, although I've read books on it. I maybe know more than your average reporter, but you know, when it really came down to it, it was about leverage, as you said, and lack of diversification. He was literally in the same trade 5 different ways on steroids. I mean, that's
Okay.
just amazing.
You believe in the cockroach theory?
Uh, Maybe if you tell me what it is.
Well, when if you see one in your house, there's more,
Well, yeah,
right?
that's the other thing. I just think it's fascinating that the banks themselves didn't care as much. They were just sucking
Yeah.
in
Where
its
were
fees.
their compliance officers and
Well,
margin people?
I'll tell you, that's a great point, particularly at Credit Suisse, which was holding the biggest bag of what at the end. I spoke with someone who was very senior at Goldman Sachs, particularly at the in the prime brokerage department, which works out these deals with the Bill Wongs of the world. And I can't say the guy's name, but he's a major player and he doesn't work there anymore. And I said, what do you make of this? He goes, Charlie, here's why Goldman was out first. You don't earn nickels to lose dollars. And that was always the mantra of the Goldman Prime brokerage when they were lending to people. If you notice, they got out totally unscathed or largely unscathed. Particularly compared to how much money they probably made off of them. The minute they smelled that there were 5 people in the room with the same trade, you could just imagine that the Goldman guy that was in that meeting that Credit Suisse held to try to get an orderly unwind was, texting his buddies like, sell everything. You know what I'm saying?
Yeah.
And that's just the way Goldman and Morgan do things. And they got out, relatively unscathed. I hear it's immaterial to the balance sheet. They're putting that out there. I'm pretty sure it was. And, he, and the other guys were like, they just can't play. You don't go to a gunfight with a knife in your hand. You know what I'm saying?
It makes me think that if we can have a blow up with the S&Ps and most market indexes at new highs, it makes me wonder what else is at the bottom of the ocean should the tide wash out, go back out to sea, and we have a 10 to 30% correction in the market, which will come. I don't think we're more than a few months away from something like that. I'm not sure the catalyst, but if it can happen in an ultra bullish environment, how many Bill Huangs are out there if the market falls? That was only 2 or 3 stocks that got hurt. What if there's a general market sell-off, Charlie? Do you suspect that there are many, many more, bombs where the fuse would be lit with a decline in the market?
Yeah, well, I mean, remember, just not too long ago, we were talking about GameStop and how it almost tanked a bunch of hedge funds, including Melvin Capital, run by a really smart guy, Gabe Plotkin. How did a smart guy like that get caught in a short squeeze? By the way, it's all these sort of, there's lots of talk about how people like Wong were on the other side of that short squeeze, not just a bunch of kids in their pajamas.
Yeah, it's hard for me to believe that it was just Reddit.
But if you think about it, how does a guy get that, get that exposed? He's obviously a smart guy, made a lot of money in past years. I hear he's doing very well now. But how does that happen? And some of it happens when, money is cheap,
Yeah, you wrote about that. Some of this lays at the doorstep of the Fed. You wrote
right.
That the Fed low interest rate policy is part of this.
Right. And it breeds like gamble, like people take risks beyond the norm. I mean, listen, everything's a risk. I mean, you walk across the street, you risk getting, hit by a car, right? I get that. Markets are inherently risky. That's what they're made to do. But when the Fed is sort of like encouraging, sort of, and for a time at least, making the consequences of risk taking not very severe, right? Because that's what happens when you get low interest rates. You can keep borrowing and do other stuff. People let down their guard, and I think that's one of that it would only be logical that there are 5 Bill Wongs out there.
Yeah,
that's logic.
Multiply that. This first time I saw you write about Bitcoin, Charlie, and wrapping your head around it, and you were talking about how you can see how it makes sense, especially as a hedge against a weak dollar.
Well,
I've seen it go. I'm not sure if it performs better with a weak dollar or a strong dollar. I've seen it perform and not perform in the same environment. So, I was making a different
Dale. I was making a different case.
Okay.
Listen, I was a guy that was, completely skeptical of crypto and this whole movement. I
just don't understand it.
I didn't quite understand it. I can't tell you how many people I sat down with that are pretty big in the field that tried to explain it to me, and I was just constantly skeptical about it and then a light switch, dawned on me one day. I must have been running or something, and I just realized that if you step back, and then some of it related to GameStop. When Vlad Tenev, the head of Robinhood was talking about instantaneous settlement. Why do we have to wait 2 days to settle a trade? Why can't we settle it in a second? Okay. And I started talking to hedge fund guys. They said, well, just so you know, if it's instantaneous settlement, there won't be any short selling anymore because you need 2 days to locate stocks and stuff. That would be bad for the market. But it made me thinking, like, why do I have to go through 40 different levers to buy a house? Why are all these checks and balances if you can do it instantaneously? If there's a technology like the blockchain to do it instantaneously, when you start like getting your hands around the blockchain, and then you think, okay, what is the currency of the blockchain? Well, the currency of the blockchain is simply something that can be created, although there is a
limit,
a ceiling, a limit to it. And then on top of that, you say to yourself, what is the limit to the dollar in this system? Printing the dollar.
There is no limit.
There is no limit. There is no stopgap. And so then when you start like looking at it like that, I became much more of a believer in Bitcoin. Listen.
Did you buy any?
No, and because I
well,
don't.
Then you're not a believer.
Well, no. Here's the thing, Dale.
Right.
I can't really buy stuff I report on.
All right.
I got to go to mutual funds and stuff. But no, here's what I'm saying. If you think about it, it could be a safer system than what we have now, which is just whatever you want to do, all of a sudden,
whoever's running the Fed.
Yeah.
Okay. All right. Well, why don't we talk a little bit about former President Trump considering a SPAC, which, I'm still not sure what they are. It's just a way to go around the formal listing process. Is that the way you look at SPACs? I mean, it's like the wild, wild west, and he wouldn't be the first politician. I believe Paul Ryan, who has no business experience, raised a lot of money in a SPAC. So
that's interesting. I didn't know that about Paul Ryan.
He has a SPAC.
He's a board member of my the parent company that runs Fox.
Okay.
And I'm mixed feelings with it. I think it's probably a good way to raise money for smallish type companies, right? That need access to financing, that maybe don't want to go the traditional route where you have to.
Is it cheaper, Charlie? I mean, expense wise, it probably is less complicated, bureaucratic.
It is, because you're essentially skipping the whole VC process almost, aren't you?
Yeah.
Or it's
amazing they exist. Yeah, it's amazing they exist.
Yeah, a couple layers. So but the other thing is you're skipping layers. That it's the same thing with the 1 day processing, or the 2 instantaneous processing of stocks. That those 2 days you catch a lot of mistakes, right? The VC process, the traditional IPO process, you catch a lot of crap that goes on in between. When you start raising money from a venture capital standpoint, and I'm not an expert at this. I talk to people that do it. To when you go public, there's a whole. It's like you're earning your what the mafia used to say, make your bones.
The VIG.
You're proving yourself. So that's kind of the interesting thing from my standpoint, is that you skip those levers. Now, is that a function of technology, a function of progress, or is that a function of a bubble? Is what
a symptom. Yeah, it could be a symptom. Like you could, have any of your tweets gone for $500,000 on an NFT? Or
that's what
any of your. What's NFT? It sounds like NFP, but NFT. I mean, what a speculative era we live in.
And by the way, you need some of those things to blow up to create the atmosphere where there's at least. You need to get rid of the moral hazard that exists when they don't blow up, where if there's no consequence to risk, you just keep taking more and more risk. And so when that happens, we'll figure out whether the SPAC craze is real or nothing. Now, we remember, everybody thought the .com thing was this huge thing where anything could be .com and make a lot of money.
Right.
Then it blew up, right?
Right.
But .coms, the tech companies are what's driving the economy. I mean, Amazon, went through the ups and downs and survived, and is now one of the biggest companies. So remember, there is a degree of creative destruction that goes on here.
Okay, I have a question I forgot to ask you earlier related to Wang. Did the whale at Goldman blow out more capital, or was Wang's bigger than the whale at Goldman?
The whale you mean J.P. Morgan's whale?
Oh, was that it? J.P. Morgan?
Yeah, the
Yeah,
London whale you're talking
yeah,
about.
that London whale, right?
Well, I'm trying to. I can do a quick Google search, but it sticks in my head that the London whale cost J.P. Morgan 6 billion.
Okay,
But that was a little different. It was an internal hedge fund, so to speak. It was, running.
right.
He was taking risk with the bank's portfolio, and then the market smelled, that he was on the wrong side of the trade, and they all ganged up on him and they squeezed him
Okay,
on his trades. This was a little different. The street didn't exactly mimic this guy's trades. They
they
held
went with him.
they went with them. They held the derivative. You see, the
Yeah.
derivative apparently was a basket of stocks that were highly leveraged. And so the street would have to sell, like J.P. Morgan, excuse me, Credit Suisse would have to sell the Discovery stock, the Viacom stock, into a declining market. That's where they lost money. You see what
Okay.
I'm saying?
Yeah. All right. Well, I want to wrap it with this, something that's close to my heart. I worked for managers and bosses like Michael Solomon of Goldman. And, I worked Saturdays. So what's the beef
You mean,
of all these
you mean?
reps at Goldman?
I think it's isn't it David Solomon? I could be wrong, but
I wrote down Michael, but maybe it is David Solomon.
I'm,
But he wants people to come back into the office.
listen.
Charlie, I don't know about you, but I've been working remotely for, I don't know, 20 years. I miss the days of being able to go into the office and collaborate with people. Don't you miss the days of going to the
Oh yeah,
studio?
and I'm
I mean,
going.
what?
I'm going. Listen, I'm today's Freedom Day for me because
Okay,
I am. It's David Solomon. I was just
David.
checking
Okay,
making sure I
all right.
wasn't losing my mind there, but I've written his name so many times. Yeah, I miss going to the office. I'll be going starting next week again. I'm in my 2 weeks after being totally vaxxed.
Oh, okay.
Um,
Congratulations,
Listen,
man.
this guy is a good CEO. I mean, he brought the company back. He cares about shareholders. He and he's a little rough around the edges, maybe, but he knows what he's doing. And the kids are just like, this is a little bit of millennial angst here.
Yeah, there is.
Listen, I made listen when
My
thank God I
best
don't
day for opening new accounts as a broker was Saturday. You know why?
listen.
Because people are home. They're not at work. They
Oh
have
yeah,
time to think about their future and what they're going to do. So I think that David has the right idea to help his people become.
I I'm telling you, in journalism, particularly when I was a print journalist, we didn't make anything, and we were just happy to have a job at the Wall Street Journal.
Yeah,
I worked every
yeah,
day, and like I would work at least 12 hours and work out for lunch and then come back to the
yeah.
office, leave there at 10. This was a daily grind that I did for years. Now, thank God I'm 60. I'm going to be 60 next year, but I don't have to do that now. But, I still work really hard. I'm still like, you see what I do. I'm up early. I'm,
Yeah.
clanking away every day. I just don't understand what their, what the big deal is here.
Yeah,
So
so
you work
maybe it's kind
Saturdays.
of a non-story that's really about ethics, values, and what it used to take to be successful.
I think it's a story in the sense, and this is how we wrote it, and I wrote it. It was a story in the sense that it was the generational divide on what is
Yeah,
a problem, what is how much time you should spend at work. I think that's because it's not just happening at Goldman; this is happening at all these firms. And by the way, there's a competition for talent because these kids are really smart. They can go to tech. They can.
yeah,
So there's a give and take among the employees versus the firm on how to how do you retain talent and what you should give as a benefit to retain that talent. And it looks like these kids don't want to work Saturdays. That's one of the benefits.
Yeah, I wonder what they want to do. They have some kind of experience besides work, right? You know,
Sounds that way to me.
yeah. So Charlie, this is always a good experience for me to talk to you and for our community to hear your thoughts.
Yeah, I love doing this. I think it's an educated 15 minutes or 20 minutes of my day. So it's,
yeah, so I really appreciate you being here, and enjoy you coming in every month. And thank you for continuing to send me your writings and your broadcast snippets from Fox Business. And I really appreciate our time that we have to talk about what you're focused on. And you want to leave us with anything you're looking at for next week?
That's a great question. I am so busy right now covering Major League Baseball's boneheaded move to get out of Atlanta and the business implications, and I'll be on all day talking about that again.
Okay,
because that's, believe it or not, it's a big business story. They just pulled $100 million out of the hands of Atlanta because of this law. And the other part is, I don't think people understand just how much pressure baseball was to be political here. It's a game. It's a business.
It happened. Yeah.
And
happened in the NFL and in NBA everywhere now.
But Rob Manfred, and this story is going to come out. I've been writing it. At the Manfred, the commissioner, is going to. I mean, you'll see in some of this reporting, he thought the least political avenue was to get out of town because of the pressure that was being put on him by activists like LeBron James and Stacey Abrams, and I heard Al Sharpton was in the mix too. So it's like, from a business standpoint, he looked at it and said, okay, I can either have the game in Atlanta. We really want to celebrate Hank Aaron's, the late great Hank Aaron, this year, but it's going to be. But it's going to be a political show about this Georgia voting law, and all they're going to do is break my chops about whether I support it or against it. And LeBron James is going to go public, and there's going to be broadcasts. Now, we should point out that Stacey Abrams said she wanted them to stay, but she's kind of speaking out of both ends of her mouth. She wanted them to stay, but she wanted him, Manfred, to support this, to come out against the law, the Georgia voting law. You think about that. You're a business guy. You got to put together the All-Star game. You got to get fans in the seats probably, and you got to take a political position. I mean, it was just untenable for the guy.
What a beanball at the beginning of a scene.
It's
and more
crazy.
than a brushback, right?
Dale.
I mean, that was yes.
Hello, Charles.
Hey.
I don't know, but for some reason I seem to have guessed the numbers right. We finally got the BLS numbers for PPI. It's 4.2% year on year.
Oh, that's a big rise. Okay.
Yep.
Well, so if you're worried about the long bond blowing out, maybe that's the reason. What's the 10-year doing right now?
10-year last.
Let me see.
I got it here. 168, up 6
168.
pips. Yeah.
I can tell you that a lot of my sources, hedge fund guys, sophisticated guys, think the Fed's going to suppress rates, going to have to suppress rates, because you just can't blow out. The Democrats want such a spending bill. I mean, think about it politically. If you're Joe Biden, you got a 1-year window to be in the majority if you don't spend like crazy and buy votes. So then you got your 51 member majority. You got to do it, and you got to do it big. Okay. To keep that majority. That's because the chances of the Democrats usually in off-year elections keeping the House and the Senate are very low. So remember, he's got a short window, and the theory is he packs everything he can within that period. And then if he does that and the markets start going nuts, if the bonds start spiking, the yields, well, then you need the Fed to come in. And Powell said he doesn't want to do that, but who the hell knows?
Powell has said many things, and he has done the opposite multiple times. So
what they'll do is they'll have Powell and Yellen and Bernanke holding hands and singing "Kumbaya."
Yeah, I think you're right.
Yeah,
I think you're right.
He did that.
And the other thing is this: he's up next year. So if he doesn't do it, they'll just replace him with someone that will, right? Lyle Brand,
like an Arthur Burns,
Arthur Burns. It's great that I actually remember who Arthur Burns was. That was Nixon's.
Me too.
The
The
guy that
fact that I
created
remember
inflation.
anything anymore, Charlie, is amazing to me. Okay, I've old timers. Anyway, thanks, Charlie, for being here, buddy.
All right,
Appreciate it.
Dale, talk to you next month, hopefully.
All right, all right.
Gotcha.
Bye-bye.
Appreciate you being here, Steve.
Steve, thanks. Appreciate it.
Yeah,
Thank you.
great week, everyone, and you could join the whole team on the Morning Edge in 12 minutes. That's a wrap, everyone. Have a great week, and remember, don't just count your infrastructure bills and all the government spending. Pretend they're blessings and count your own. And I'll see everyone on Monday. Have a great weekend. Adios.